Welcome to the Deep Dive. This is where we take a whole pile of sources, reports, you name it, and we really dig in to find the insights that matter for you.
That's right. And today, we're diving deep into Eli Lilly and Company. We've got their latest quarterly report, the Form 10Q, and their earnings release.
Our mission, to pull out the key takeaways from these documents. We want to understand what's driving their performance, the challenges they face.
But really how they're positioning themselves strategically. It tells us a lot about the future of medicine, actually.
Okay, so let's jump right in. The big question, I guess, is how does a company like Lilly achieve this kind of, well, frankly, explosive growth, especially in such a tough, regulated market? What's its signal?
It's a great question to kick things off. Let's start with the big picture, the Q2 financials.
Hit us with the highlights.
Well, the performance is pretty remarkable. Worldwide revenue shot up nearly 40% compared to last year.
40%. Wow.
Yeah, hitting over $15.5 billion just in the second quarter of 2025.
And that wasn't just revenue without profit, right? The bottom line kept pace.
Oh, absolutely. Net income almost doubled. A huge 91% increase
91%.
to $5.66 billion. And that flows right down to earnings per share.
Which also nearly doubled, I saw.
Exactly. Diluted EPS soared 92% to $6.29. These aren't just marginal gains. It's a massive leap.
Okay, so explosive numbers, but what's really underneath that? What's the engine here? Is it just pure demand, or is there more to it?
Well, that's the key, isn't it? The main driver was volume. A 42% increase in volume.
42%.
Which is just huge, shows incredible demand. But interestingly, that was partly offset by a 6% decrease from lower realized prices.
Lower prices, so they sold way more but got a bit less for each unit on average.
Kind of. It suggests maybe a strategic move to gain or maintain market share, maybe dealing with some pricing pressures, but the volume more than made up for it.
Interesting. It paints a picture, like you said, of aggressive investment fueled by these really strong products.
Exactly. It's a clear strategy. Dominate these emerging therapy areas.
And what about their efficiency? Did their gross margin improve?
It did, significantly.
Yeah.
Up 3.5 percentage points to 84.3%.
84% margin, that's quite high.
It is. And they attributed that mainly to better production costs and a favorable product mix. So selling more of their higher margin drugs.
And those strong margins, they're obviously plowing that back into the business, right? Looking at the expenses.
Absolutely. You see it clearly in R&D. Research and development expenses jumped 23%.
To over $3.3 billion.
Right. That's serious investment in their future pipeline, both early and late-stage research.
Is that enough, though? I mean, drug development is so expensive, so risky, or is that a pretty standard level of reinvestment?
It's a substantial commitment.
Yeah.
It signals real confidence in what they have coming through the pipeline. And alongside that, marketing, selling, and admin costs were also up.
By how much?
30%, up to $2.75 billion. That supports the current blockbusters and prepares for future launches.
Makes sense. You need the marketing muscle, too.
And we should also mention the acquired IPRD charges. That's in-process research and development.
Ah, yes. Costs from buying research that's not finished yet.
Exactly. About $154 million in Q2, which trimmed about 14 cents off their earnings per share. It's part of their growth strategy.
So yeah, these figures aren't just numbers on a page. They show a company really pushing hard on growth, on innovation. What really jumps out at you from this overall picture?
For me, it's the sheer velocity, but also the clear strategic focus. They're leveraging current success, like really aggressively, to build for the long term, investing in R&D, in marketing, in acquisitions.
And in manufacturing, as we'll get to.
Precisely.
Yeah.
Which leads us nicely into the products actually driving this momentum.
Right. Let's talk blockbusters, because some of these product numbers are just staggering.
They really are. Let's start with Mounjaro. Worldwide revenue up 68% to $5.2 billion just for Mounjaro in one quarter.
Wow. How did that break down between the U.S. and elsewhere?
In the U.S., revenue was up 37%, driven by strong demand, even with those lower realized prices we mentioned.
Okay.
But outside the U.S., it was even more dramatic. Revenue nearly tripled, hitting $1.9 billion. That's driven by volume and launching in new countries.
So Mounjaro is just a global phenomenon at this point.
Pretty much. And then there's Zepbound.
The sister drug focused on weight loss.
Right. And its U.S. revenue growth is, frankly, incredible. Up 172%.
172.
To $3.38 billion. Again, driven by demand, also with some lower realized prices factored in.
The demand for these GLP-1 drugs is just reshaping everything.
It really is. And it's not just those two, though they are the giants right now. Verzenio, their cancer drug, also showed solid growth.
How did Verzenio do?
Worldwide revenue up 12% to nearly $1.5 billion, mostly driven by increased volume, both in the U.S. and internationally. Consistent performer.
Okay, so Mounjaro and Zepbound are the rocket fuel, but other drugs are contributing too. Now, this incredible demand, especially for the incretins like Mounjaro and Zepbound, it creates challenges, doesn't it?
Absolutely. The report acknowledges that demand actually exceeded production at times back in 2024.
So supply chain issues, keeping up.
Exactly. They say that right now, tirzepatide supply is exceeding U.S. demand overall. But the supply chain is complex, so you can still get periodic shortages of specific doses or presentations.
That must be frustrating for patients and doctors.
No doubt. And Lilly knows this. They state they're making major investments to increase production capacity over the next several years. Building new plants, expanding existing ones, it's a huge focus.
And it's not just supply. There's another issue tied to this demand, right? Counterfeits.
Yes, a really serious one. The company explicitly mentions the problem of counterfeit, misbranded, and even illegally compounded versions of these incretin drugs.
Which is dangerous for patients.
Extremely. It undermines the whole system. And they mention having to take legal action to combat this. It's a constant battle when you have drugs this popular and, frankly, expensive.
So you've got this balancing act. Unprecedented demand versus the absolute need for quality control and patient safety. That must heavily influence their operational focus.
Definitely. It's a tightrope walk. You want to meet demand, but you absolutely cannot compromise on safety or quality.
Okay, let's shift gears slightly. We've seen the current drivers. What about the future? Let's look at their pipeline and their recent acquisitions. This is where they're placing their bets for tomorrow.
Right. And there's a lot happening here. Starting with tirzepatide, the molecule in Mounjaro and Zepbound, they're not resting on their laurels.
What's new with tirzepatide?
They've submitted applications to the FDA and the European Commission to use it for type 2 diabetes in kids and teenagers.
Expanding the label.
Exactly. Plus, they got positive phase 3 results looking at cardiovascular outcomes in type 2 diabetes patients. That could be huge.
Better heart health outcomes, on top of diabetes control.
Potentially, yes. And they've even started a phase 3 trial for type 1 diabetes.
Interesting. Did everything work out? I saw a mention of a withdrawal.
Yes. They did withdraw their U.S. application for using it in heart failure with preserved ejection fraction. So, not every shot goes in. That's R&D.
Fair enough. What else is exciting in their metabolic pipeline? Insulin.
Yes, insulin Excitora Alpha. That's their once-weekly insulin. They've submitted it in Europe for type 2 diabetes.
All once-weekly insulin.
Yeah, phase 3 trials showed it reduced A1C, and the safety looked consistent with daily insulins. Convenience is a big factor there.
Definitely. And the oral GLP-1, that sounds like a big deal too.
Or for glipron, yes.
Wow.
This could be massive, a pill instead of an injection for weight loss and diabetes.
Huge potential reach. How are the trials looking?
Very positive phase 3 results announced. For obesity, showing significant weight loss up to nearly 30 pounds, and positive results for type 2 diabetes too. And they've just started another phase 3 trial looking at it for hypertension in people who are overweight or obese. So expanding its potential uses again.
That really could change the landscape if it gets approved. What about outside of metabolic health? Alzheimer's? Oncology?
Big news on donanemab, their Alzheimer's drug. It got a positive opinion from the key committee at the European Medicines Agency, the CHMP.
So a step closer to approval in Europe.
A big step, yes. For early symptomatic Alzheimer's, it also got an updated U.S. label and approval in Australia. And trials are showing its benefit seems to grow over 3 years.
That's encouraging for a really tough disease area and cancer.
Pirtobrutinib, which is marketed as Jaypirca. It got European Commission approval for chronic lymphocytic leukemia.
Okay.
And importantly, met its main goal in a head-to-head phase 3 trial against a major competitor, Imbruvica. That's a significant win.
Any other pipeline highlights?
Yeah, a few more quick ones. Phase 3 trials started for olomorasib in non-small cell lung cancer. They presented new data for an antibody-drug conjugate in ovarian cancer. And maybe importantly from a competitive standpoint, Zepbound actually showed superior weight loss compared to Wegovy in a head-to-head trial called SURMOUNT-5.
Zepbound beat Wegovy head-to-head. That's big news in the obesity market.
It certainly is. Adds fuel to that fire.
So a packed pipeline, But they're not just relying on internal R&D, are they? They've been buying things too.
No, they've been very active with acquisitions, and strategically so. It's not just random shopping.
What's the strategy seem to be?
Two main thrusts, really. One is bolstering manufacturing. We talked about supply constraints. Well, back in May 2024, they bought Nexpharm and Isopro Holdings for over $900 million.
What did that give them?
Expanded capacity for making injectable drugs. Absolutely critical for Mounjaro, Zepbound, and future injectables.
Addressing that bottleneck directly.
Yeah.
Smart. What about buying new science?
Yep, that's the other thrust. In Q1 of this year, 2025, they bought a program from Scorpion Therapeutics. It's a PI3K inhibitor, code STX478.
For cancer.
Yes. Currently in early trials for breast cancer and other solid tumors. That came with a pretty hefty $1.7 billion IPR&D charge, a significant bet.
And more recently, I saw a couple of deals just in July.
Very busy July. They acquired Verve Therapeutics. That cost about $1 billion cash up front, plus potential future payments.
What does Verve do?
Genetic medicines, specifically focused on cardiovascular disease. That's a big leap into a cutting-edge area. Long-term play.
Gene therapy for heart disease.
Oh.
Wow.
And also in July, they bought Site1 Therapeutics. Potential deal value up to $1 billion there, too.
And their focus.
Pain treatment. They acquired a drug candidate called STC-004, which targets something called NaV1.8, a non-opioid approach to pain.
So gene therapy, pain management, oncology, plus manufacturing. It's quite a range.
It is. If you connect the dots, you see this clear commitment to diversify and strengthen their pipeline, focusing on high-growth areas like cardiometabolic, oncology, potentially neuroscience with Alzheimer's and pain.
While also ensuring they can actually make the drugs they develop or sell.
Exactly. Although it's worth noting the report does mention increased regulatory scrutiny of these kinds of deals from the FTC and European authorities.
Meaning future acquisitions might get harder or take longer?
Potentially. It adds a layer of uncertainty or complexity to that M&A strategy. Oh, and one more thing. They're also expanding their collaboration with Purdue University, investing up to another $250 million. So academic partnerships remain important too.
Right. So this whole section, it's really about building for the future, isn't it? How do these moves, the R&D, the acquisitions, how do they position Lilly competitively? And what does it mean for, the kind of medical advances you listening might see?
It positions them very strongly. They're building like a multi-pronged attack for future growth, building on novel science gene therapies, oral GLP-1s, but also making sure they have the manufacturing might to deliver. It's about trying to secure leadership not just for a few years, but potentially for decades.
Okay, so strong internal engine, strategic bets on the future, but no company operates in a vacuum. Let's talk about the external factors. The headwinds and tailwinds shaping their world and their financial outlook.
Absolutely crucial context. And there are some significant pressures. The biggest one is probably pricing and access.
Globally, right, not just in the U.S.
Globally, there's constant pressure everywhere on affordability. This leads governments and payers to implement cost controls, mandated discounts, tough price negotiations, restrictive formularies.
And in the U.S. specifically, any recent moves?
Yes. The report mentions a May 2025 executive order encouraging most favored nation pricing. Basically, trying to make sure the U.S. doesn't pay more than other developed countries.
Which could lower prices.
Potentially. And then in July 2025, letters went out to drug companies about pricing objectives with the deadline of late September. The pressure is definitely on.
And the elephant in the room, the Inflation Reduction Act, the IRA, how's that playing out for Lilly?
It's a major factor. The IRA empowers Medicare, specifically HHS, to negotiate or really set prices for certain high-spend drugs.
And has that affected Lilly yet?
Yes. Jardiance, which they co-market with Boehringer Ingelheim, was selected back in August 2023 for these government-set prices starting in 2026.
So that impact is coming soon.
It is. And they expect more of their drugs will be selected in future rounds. It's a direct hit to revenue potential for drugs treating Medicare patients. Plus, there are other trade issues mentioned, like investigations into drug importation and potential tariffs.
So a lot of pricing pressure. What about taxes? Any changes there?
Yes, a big one just enacted in July 2025. It's called the One Big Beautiful Bill Act, or OBBA.
Okay. And what does OBBBA do?
It actually makes some things better for companies like Lilly in some ways. It makes permanent some favorable provisions, like being able to immediately deduct U.S. R&D costs.
That's good for encouraging investment.
Yes, and 100% bonus depreciation too. However, it is expected to raise their overall effective tax rate for 2025 to around 19%.
So higher tax rate, but maybe lower actual cash tax payments in the short term because of those deductions.
That's the expectation for the second half of 2025. So a mixed bag, but the immediate R&D deductibility is a significant win for the industry. It also included some spending cuts to federal healthcare programs, which could indirectly affect the market.
Okay, pricing pressure, tax changes. What about the legal front? Always a minefield for pharma.
Always. They mentioned several ongoing issues. Litigation around the 340B drug pricing program continues, involving both HHS and state investigations.
Right.
There's the big multi-district litigation, the MDL about insulin pricing, plus related state lawsuits. They have reached some non-monetary settlements there, for example, with Minnesota and New York.
But the core litigation continues.
It seems so. They also mentioned patent litigation over Emgality. A jury verdict against them was actually overturned, but now that's being appealed. An appeal related to Aptos litigation was denied.
So wins and losses, appeals, standard stuff.
Pretty standard, yes. And significantly, there's now product liability litigation popping up for Mounjaro, Trulicity, and Zepbound, cases in the U.S. and even Israel.
That often happens with blockbuster drugs, doesn't it? Liability suits follow success.
It's very common. And the report notes they are self-insured for these kinds of litigation losses, which is also typical for a company this size.
Okay, so navigating all that. Pricing headwinds, tax adjustments, legal battles. How does that all shake out in their financial forecast for the rest of 2025? Did they lower guidance?
Quite the opposite, actually. They raised their full-year guidance.
Raised it, despite all those pressures.
Yes. Revenue guidance is now $60 to $62 billion. The midpoint is up $1.5 billion from their previous forecast.
Wow. So the momentum from drugs like Mounjaro and Zepbound is just overwhelming the headwinds right now?
It certainly seems that way. Earnings per share guidance was also raised significantly. Both reported and non-GAAP EPS forecasts are up.
And the tax rate.
They confirmed the updated forecast is around 19% effective tax rate for the full year, reflecting that OBBA impact.
Okay. And finally, their overall financial health. Can they afford all this expansion, the acquisitions, the share buybacks, the dividends, with all this going on?
The report suggests yes. They emphasize strong liquidity, plenty of cash, access to borrowing. They reiterate the commitment to much higher capital spending for manufacturing over the next few years.
Billions, potentially.
Yes, potential future obligations related to contract manufacturing alone could be up to $8 billion. They're spending big. They also bought back nearly $1.9 billion in shares in the first half of the year and paid out about $2.7 billion in dividends.
So the balance sheet looks strong enough to handle these ambitious plans.
That's the picture they paint. It really does raise that crucial question, though.
Yeah.
How do you plan for the long haul, for sustained innovation, when the ground is constantly shifting under your feet with regulations, politics, legal fights?
It must require incredible agility.
Immense agility and foresight. This whole section really underscores the complexity. It's not just science, it's navigating this intricate global web. And you have to wonder, how do you think these pressures ultimately affect the medicines that become available and what they cost?
So let's try to wrap this up. What does it all mean? We've seen this picture of Eli Lilly, just tremendous Q2 performance.
Incredible performance, yeah. Driven by phenomenal demand for Mounjaro and Zepbound, primarily.
Fueled by that, they're investing heavily back into the business. R&D, marketing, strategic acquisitions to build the future pipeline, and critically manufacturing capacity.
But at the same time, they're navigating this really complex external environment. Pricing pressures from governments and payers, the IRA impact, tax changes, ongoing lawsuits.
It's a fascinating snapshot of a company at the peak of its current success, but also deeply engaged in managing risks and building for an uncertain future. It's right at that crossroads of policy, access, and science.
Absolutely. They're not just riding a wave. They seem to be trying to steer it, while also preparing for the inevitable choppy waters ahead. The balance sheet gives them the power to do that for now.
Definitely. Which leaves us with maybe one final thought for you to consider. Given everything we've discussed, the huge cost of developing new drugs, the intense pressure on pricing, but also the incredible speed of scientific progress, how can these companies, how can the whole industry keep balancing that need for breakthrough innovation with the public's undeniable need for affordable access to medicine?
That's the multi-billion-dollar question, isn't it? And one we'll definitely keep watching.